Food prices crisis. It will get worse before it gets better. Much worse. Hi, I'm Michelle Sterling for Friends of Science Society, and today I'd like to talk with you about the food prices crisis in Canada. It's getting quite serious, and one of the surprising people who might be coming to the rescue of ordinary people is Dr. Sylvain Charlebois, the food professor, as he's commonly known. It seems that he's challenged the Bank of Canada to explain how the carbon tax is affecting the consumer price index in Canada. And the bank had a big fail, but I'll show you that as we go along. So let's have a look at what I found. So first of all, the federal government is concerned about the food prices crisis, but they're mostly concerned about going after grocers, not the carbon tax. And really, the biggest issue facing Canada, according to a very recent Leger poll, is the cost of living, economics. So 93% of the people see economics as the most important issues. So we've got inflation, housing affordability, the economy, rising interest rates, healthcare. Climate change is way down the list. And if you add up all of these things except for climate change, you end up with 93% see economic issues as the most important. So here's the food professor, Dr. Sylvain Charlebois. And the nice thing is he's also conversant in both French and English, so he gives a broad perspective to the entire country. So he wrote to the Bank of Canada and asked them about how they calculated the inflationary impact of the carbon tax. So they said that they simply looked at the directly applied. That means gasoline, heating oil, and natural gas. And then they go through a lot of complicated math here and all kinds of different calculations, this, that, and the other thing. And they come up with a number that's 0.15%. That's the impact on the carbon tax. And then they do admit that this estimate applies only to the direct impact of the carbon tax on those three products that are included in the consumer price index: gasoline, heating oil, and natural gas. It does not attempt to capture any second round or pass-through effects. This is the Bank of Canada, people. Oops. So, actually, we did this report in 2019, and Robert Lyman did it for us. And he found that the carbon tax at that time imposes a deadweight loss of $1.30 on every $1 of tax revenue. So that may have changed in the meantime because the carbon tax went up, but he explained it's a deadweight loss on the economy. That's what the carbon tax is. That is the cost to the economy over and above the amount raised by the government. Production costs rise, real wages decline, and it imposes at least $1.30 loss in economic welfare from $1 in tax revenue. The effect is worse in countries that already have large existing taxes like ours. And from Investopedia, if you want to read a bit more about it, here's another example of a deadweight loss of taxation. So they take a hypothetical city-state of Bravos. It imposes a flat 40% income tax on all citizens. The government stands to collect an additional $1.2 trillion a year through the new tax. So that sounds great. But that big chunk of money, which is going to the government of Bravos, is no longer available for spending on consumer goods and services or for consumer savings and investment. So suppose consumer spending and investments decline at least $1.2 trillion and total economic output declines by $2 trillion. In this case, the deadweight loss is $800 billion. The $2 trillion total output less $1.2 trillion in consumer spending or investing equals a dead weight loss of 800 billion. Well, you know, I'm an ordinary person. These are big numbers. You know, they're hard to imagine. So what was interesting is just as I was putting this presentation together, I ran across a tweet from a fellow who goes by the handle of Marty Up North. And he's quite well known on Twitter, especially in Alberta. But let's have a look at how he explains his carbon tax and the implications. So he's got a little video that he did, and he's responding to Mark Gerritsen, who is saying, "Don't let them take you for a fool. The carbon tax does not contribute to inflation." And so he shows us how. He pulls out his utility bill, his gas bill, and then he goes through it in quite a bit of detail, which I will not do for you right now. You can go and read it online. But here is the deadweight loss example, because he's saying one more comment on the carbon tax. On my bill, it was $38 for 1 month. For simplicity, let's round that up to $500 a year. Since it's paid in after federal tax dollars, I need to earn $625 to cover this added expense, assuming a 20% tax bracket. So I have 3 ways to do that. The first is to cancel a $500 expense elsewhere. I can skip a birthday dinner at the restaurant for my anniversary, or forego buying new skates, or stay home instead of going skiing one weekend. He calls it a crappy option. Now, just remember, this means that the restaurant won't get that 500, the skate manufacturer and the sporting goods store won't get the 500, and the skiing hill won't get the 500. His second choice is to ask the boss for a $625 raise. Well, he's going to laugh and tell me to take a hike, especially because his business can barely make a profit. And the third option is to earn with investments. Assuming a 5% return is decent, I'd need $12,500 in stocks, making 5%, to generate an annual return of $625. The problem is I can't even save any money as it is. The stock market is risky and any gains are taxed. So option 1 it is. And there it is. This is the deadweight loss to the economy. This starts the domino principle of everything going into a sliding decline. But wait until they, meaning the government, want grocery stores to count every carbon dioxide molecule. So this is a representation of a carbon dioxide molecule, 1 carbon and 2 oxygen. So the opinion here is from Dr. Tammy Nemeth, and she just published this in the Financial Post. And if you're worried about grocery prices, wait till we get compulsory carbon accounting. Retailers could be required to account for emissions from production to consumption of everything they sell. Now just imagine the number of items in a grocery store, the thousands, perhaps hundreds of thousands of items, and that they would have to track the carbon accounting emissions from production to consumption of everything. And what's this coming under? It's coming under the International Sustainability Standards Board, which we perceive as a threat to you and your family. So if the federal government, which we saw off the top, they claim that they're worried about grocery prices and they're going to try and impose some restrictions on grocers, wait till the global sustainability and climate-related financial disclosures of the International Sustainability Standards Board come to Canada. So yes, your grocer will be busy with Count the Carbon. So Dr. Nemeth writes, for grocery retailers, this includes explaining and accounting for emissions in the production, transport, packaging, refrigeration, consumption, and disposal of everything they sell. In other words, your grocery store will need to quantify all the emissions of that hamburger, the hamburger meat that you bought, whether in producing it, including all the steps from farm to processor, transporting it to the store, packaging and refrigerating it at the store, plus your traveling to and from the store, your refrigeration, and eventually your cooking of the hamburger and your disposal of the packaging and any waste of the food. Like, that just sounds absurd, doesn't it? It's called the Scope 1, 2, 3 emission. So in Scope 1, this is pretty easy. These are the emissions from the sources on site. You check your bills, and there you go. You probably have most of it. Then Scope 2, this is indirect. It gets a bit more iffy because these are from outside companies and suppliers to you. And then Scope 3, the totally indirect, coming right down to you, the consumer. And yes, it's all coming under the Canadian Sustainability Standards Board, which is part of this other organization, which is part of the International Sustainability Group. So the objective of this organization and this international group is to consolidate the many forms of reporting that there is today. But in fact, maybe we shouldn't be reporting to any of these bodies, because we have here the Carbon Disclosure Project, CDP, World Economic Forum, why are we reporting to them? The GRI, the Sustainable Accounting Standards Board, the, what's this called, Task Force on Climate Financial Disclosures. I don't think I got that right. Greenhouse Gas Protocol, and the CDSB, Climate Disclosure Standards Boards. So companies are big companies. It mostly applies at the moment. At the moment, this mostly applies to large international companies that have to jump through these hoops with various forms of reporting. But all of these bodies are unelected, they're unaccountable, they're transnational. And, you know, one of the things is when you start reporting your energy use that can be calculated from your emissions calculations, you know, that's actually corporate intelligence that you're giving away to these organizations. And then other groups like various environmental, non-governmental groups, you know, the ones that are always blocking pipelines and calling for stringent regulations. These groups read these same reports, and then they often go after the corporation. In fact, right now, I think it's Greenpeace is going after, I think it's Suncor, claiming that they didn't properly disclose the climate risk in their last report, their last annual report. And this kind of climate reporting is not mandatory at this point, but these laws intend to make it all mandatory and with legal penalties. So for instance, in 2016, the Carbon Disclosure Project, this group, they wrote a damning report on the Alberta oil sands in 2016. So all the companies voluntarily send their reports into this group, the Carbon Disclosure Project, you know, and they do so in good faith. But they came up with this report that slammed all of the Alberta oil sands companies. They were all in last place. And these other energy companies, because they were buying wind farms and solar farms, they put them at the top of the list. You know, I think that that is a prejudicial misuse, a malicious use of information that was provided in good faith. They provided it thinking, okay, we'll help save the planet, and these guys used it to help put them out of business. So they're transnational, unelected, unaccountable bodies. The ultimate goal is a global carbon tax law. And of course, all the big accounting firms love that idea, because think of all the carbon molecules that there are to count in the world. And it turns out that actually all of these kind of consulting and big accounting firms not only have several of them, like Accenture and PwC, maybe also Deloitte, not only have they prepared the aggregate reports for the Carbon Disclosure Project, but It looks like they've gotten lots and lots of federal contracts since 2015. And here's Minister Guilbeault at the UN just a couple of weeks ago telling everyone climate change is seen in our wildfires. Now, let me just go back for a sec. Okay, so the other thing we didn't see here is the UNPRI. I'm going to bring that up shortly. So the global carbon tax law and price, what's that all about? Well, you can go and watch the video by this fellow whose name is Johan Rockstrom, originally with the Stockholm Resilience Center. I think he's still associated with them, although he's working more with PIX out of Germany, which is the Potsdam Climate Institute. And he has a mythical idea of all tasks, the phasing out of fossil fuels is the easy one. There's no excuse not to do it. So the UN climate change people think he's fabulous. The phase out of fossil fuels is the easy one. Yeah, right. And his objective is to establish a carbon tax of $400 a ton, and one that probably would go up from there. So you can read his paper here. Now, going back to the CDP for a moment, who are they? Well, it says that CDP is a not-for-profit charity that runs the global disclosure system. Well, why? Who are these people? Well, actually, it was established by the Rockefeller Philanthropic Fund. And the CDP, this so-called charity, publishes a black and white list of reporting corporations. So if you don't report, then you go on the blacklist. So, people may not think that that's very important. So what if your name's on a blacklist? Well, it's because the people who use the information of the CDP are this other group that I showed on the screen and I'll talk about now, the UNPRI. That's the United Nations Principle for Responsible Investment. It's a transnational, unaccountable, unelected organization. It's about 1,000 signatories. They're mostly pension funds and institutional investors like that. And they sit on about $100 trillion in assets under management. $100 trillion. So that's a lot of clout. So as you can see here, they say that climate change is the highest priority ESG issue facing investors. So they're really into ESG. They're really into climate change. Their fiduciary guru is Al Gore, and they claim to be a charity, but they actually are manipulating markets because they use this information from the CDP, and this way they decide, oh, well, that company is not climate changey enough, or they're not imposing sufficient ESG goals, so we're not going to invest. So if you have people with $100 trillion in assets under management that may or may not invest in your company, you probably will play along with them and try and comply. So we've written quite a few reports on this situation over the years. One is called Undue Influence, Markets Skewed. The other one, A Confluence of Carbonbaggers. And then there's these two, Climate Change Insights for Pension Fund Trustees and Beneficiaries, and also Climate Change Risk over Boardroom Competency. Because what's happening now is in regard to this push for mandatory climate risk reporting, they want to have an experienced climate change expert on the board. So they're not talking about somebody like an earth scientist, a geologist who studied 4.5 billion years of climate change, or a professional engineer who could look at the data and say, well, oddly enough, this data is not even outside the margin of error, so we don't have to be concerned about global warming at the moment. They're not talking about people with this kind of scientific background. They're talking about some kind of expert like a climate activist. This is effectively going to be graduation school for all the people working now in environmental, non-governmental organizations, because once some of these climate regulations are imposed, they won't have anything to be activists about anymore, right? So, all the kids who want to be a climate activist like Greta will not have a job probably in 2 years. So the job that they're creating for them is that they could sit on a board and pontificate about climate change 100 years from now and how that will affect that company. So, it's really quite out of hand. And you can see how influential this is. With regard to the Paris Agreement of 2015, they got these major companies to start committing to these various goals, like committing to put a price on carbon. Now, for some big companies, this can be a way to make money. This is why some big companies do build wind farms and such like, because then they trade in the renewable energy certificates in various global markets. This is something that you and I can't do, but we have to pay for it ultimately. This group, the We Mean Business Coalition, these are backers of Greta Thunberg. So now maybe you understand better why Greta has been running all over the world and who's been funding her. And yet it's going to come down to us. Wait until they want grocery stores to count every carbon molecule. Instead of working to deliver food to you at affordable prices, retailers will be busy with the carbon markets, which, as Mark Shapiro described in Harper's of February 2010, he said the carbon market is based on the lack of delivery of an invisible substance to no one. Doesn't sound like that's going to feed the 40 million people in Canada, does it? So they'll have to count every one of these to save the planet while you starve. And Dr. Nemeth's article said retailers could be required to account for emissions from production to consumption of everything they sell. The costs will fall on you. The standards that are coming are not just another set of accounting rules that ought to be left to accountants to decide. They are intended to completely transform how all Canadian businesses operate, and the substantial impacts they will have on costs will be passed on to consumers. But you probably have never heard of any of this. And of course, along with that will come a personal carbon ration for you. And how will that be applied? Well, thanks to Vaxport technology. So here's the peer-reviewed paper explaining that. And here's a plain language explainer that we did a few months ago. You can find it online. There's a PowerPoint and also a live stream similar to this type of explainer. Now, Catherine McKenna is involved in this high-level expert group at the UN, and she issued a report with her group called Integrity Matters. They actually want to push for hard, absolute reductions in GHG emissions. In other words, for taking much of the net out of net zero. So what does that mean? It means a lot of people have gone along with the whole carbon pricing thing and the net zero thing, thinking, well, there is a method in the marketplace that maybe my company cannot reduce emissions, but that's okay because I can buy some carbon credits from somebody who has reduced emissions. And that way, it's a pretend way of me reducing emissions. Some of our followers on Twitter have come up with a great example of what that actually is in real life. It's like paying a burglar to go and steal from somebody down the street instead of stealing from you. So, that kind of puts it in context. And it's not a useful thing. There's no productive outcome from all of this carbon counting. It's not going to reduce emissions. In fact, The methods that some are proposing with blockchain would probably be using tons and tons of energy just to count carbon molecules instead of using that energy to actually make food or ship it or process it or store it. Doesn't really make sense if you're a common sense person. But these are not common sense people. And so we wrote a letter back in 2022 to the International Sustainability Standards Board, and it's linked within this same item on our blog if you'd like to read it. I do want to show you an excerpt from it. This is quoting from research in the US, so the numbers are quite a bit bigger than they would be in Canada, and I don't think that they would simply be 10% less, as you might say, vis-a-vis the populations, because we're a much bigger country and we need much more energy here than most of the US. So they came up with this. Carbon accounting comes with a cost. The Competitive Enterprise Institute's Wayne Cruz estimates that the current total cost burden of US federal regulation comes to nearly $2 trillion a year. That accumulated burden also harms innovation, kills jobs, slows economic growth, and results in smaller economy and lower investment returns. But the Security and Exchange Commission's own estimates suggest that the overall cost of disclosure and compliance for public companies will rise from approximately $3.8 billion per year to over $10.2 billion, a more than 250% increase based on this rule alone. Read that last bit again if you have the stomach for it. In an inflationary environment in which stagflation is a real risk, the Securities and Exchange Commission wishes to impose at least a 250% increase in compliance costs on all publicly traded companies for disclosures that it doesn't even know will be beneficial. Talk about broadening the drivers of inflation. Fundamentally and simply put, businesses pay carbon taxes and they pass that on to you. So every time they pay a carbon tax to the government, they put that cost on whatever you're buying. So ultimately, you're going to pay the cost. And forget about the carbon dividend. It will never keep up with what you're paying. So going back to the food professor and the Bank of Canada, now it's interesting, the Bank of Canada is basing a lot of carbon risk disclosure and carbon risk accounting on a scenario which is known as RCP 8.5, which is a catastrophic scenario. And we have written to the Bank of Canada several times. We've written to the Office of the Superintendent of Financial Institutes as well, to the Competition Bureau, to the Parliamentary Budget Officer. These are open letters. They're posted on our blog. You can read them. And we've told the Bank of Canada and the Office of the Superintendent of Financial Institutes that all these groups like the Network for Greening the Financial System, which is a collection of banks who are busy with climate risk analysis, we've told them that using the scenario RCP 8.5 is implausible. And so they're basing their calculations on something that isn't happening and won't happen and can't happen. It's an implausible scenario. Yet they're using this as their baseline, as their business as usual. Now, Roger Pielke Jr. has been following this for a couple of decades. He's a climate policy analyst, and he is the one who kind of broke open this whole thing about this representative concentration pathway and finding that this one scenario was being used all the time, even though it's implausible. And he says that even the IPCC, that's the Intergovernmental Panel on Climate Change, that's the body that all governments look to for direction on climate policy, even in their report AR5, the RCP 8.5 pathway has higher emissions than all but a few published baseline scenarios. So it was never an appropriate baseline, much less the single baseline for all of climate research. So, if you look at the Bank of Canada, they claim to be separate from the political process, and they claim to also be existing to regulate credit and currency in the best interests of the economic life of the nation. Yet they can't even do a proper analysis of the consumer price index impact of the carbon tax. And meanwhile, here's the food professor who's going to bat for ordinary Canadians, and he's recommending a temporary pause on any carbon pricing policies that could adversely affect our food supply chain's competitiveness. Now, I haven't seen his testimony. I don't know if he's referred to the International Sustainability Standards Board, but the Canadian Sustainability Standards Board is planning to initiate some of these rules in 2024, which is just a few months away. So let's go back to this emissions issue for a moment. So Roger PLK Jr. has just written a post about how could the IPCC make an error this large. And he finds that even the UNFCCC has shown that the world's emissions are tracking below what's called an ISSB2-4.5 scenario. Why can't climate research and assessments keep up? And over here, he shows that in AR5 in 2013, they identified only RCP 8.5 as a baseline scenario. So you can see that here. They claim that this is the baseline when it's actually an implausible scenario. So all of the climate catastrophe writings are based on this misinformation. In fact, as Dr. Judith Curry has noted, CO2 is not the control knob that can fine-tune climate. And as we've been saying for some time, there are several new papers out that show that the IPCC global warming reports have underestimated the role of sun in warming. So there's our billboard. They tried to send us to jail for that, but we were right. So the climate emergency is over, and we do have time. And here's a comparison of some of these scenarios that I've been talking about. You can see RCP 8.5 here. Looks terrifying because it keeps going straight up almost. But we're actually down here somewhere. See? So here's the UN Framework Convention on Climate Change from October 2022, showing that we are actually SSP2-4.5. That's a variation on this scenario, but we're actually tracking below this in terms of emissions, meaning we're like over here somewhere. We're nowhere up here. So if you take away RCP 8.5 and 6 and show us where we really are, as Roger PLK Jr. says, don't take it from me, the UNFCCC tells us that the world's emissions are tracking below an SSP2-4.5 scenario. Why can't climate research and assessment keep up? So we need to end the food prices crisis. We need to cancel the carbon tax and mandatory climate reporting. And if you'd like to have sort of a lighthearted, plain language view of climate, this is by the late Dr. Dick Tonis of Holland. Very interesting little piece, quite fun-filled. And you can see on this grid of 10,000 squares, here's how many molecules would be carbon dioxide. So imagine your grocery store has to count all of these little guys associated with every single product, the transportation, the heating, the lighting, the packaging, the consumption, and the final disposal. Imagine what a waste of time and money that would be, and how much your food prices would go up. So there's a great new documentary that will be shown, previewed on October the 15th, I believe it is, on Newsmax, and you'll probably be able to find it online later. It's called A Climate Conversation. It's really a great film. I have seen a preview of it, and it cuts through the rhetoric and propaganda to ask simple questions that are addressed by Kim Monson. Sorry. So the Newsmax primetime special, A Climate Conversation, cuts through the rhetoric and propaganda to ask simple questions that are addressed by Kim Monson from the Kim Monson KLZ talk show in Denver, Greg Wrightstone, Executive Director of the CO2 Coalition, our very own Ken Gregory, Director, Friends of Science, and Ronald Stein, Professional Engineer and Energy Literacy Consultant. So it's a very good program in that it's not too demanding scientifically. There's lots of plain language in there, lots of examples that everybody can relate to, and I think it's worth a watch. So look for it. It should be available online at some point. The Newsmax presentation, as I said, will be on October 15th, 2023. And I'm looking forward to seeing it online as well. So thanks very much for watching this presentation. Please look into this matter. Please contact the people you need to contact. Please follow the food professor. He's a very interesting character and one of the few people who took the time to ask the Bank of Canada the hard question. How did they arrive at the impact of the carbon tax on the consumer price index? Well, they just did a little math, and it was really only related to the use of fuel. It didn't cover anything at all of the cumulative impact and the dead weight loss. So it's hard to believe that a bank could be so lacking in concern for the very citizens it's supposed to serve and for the very people who pay the tab at the Bank of Canada. So you can tell I'm a little upset about that. Anyway, also please read our open letters to the Bank of Canada and to the Office of the Superintendent of Financial Institutions, because I think it'll give you some insights into the ethical violations, the conflicts of interests, and the corruption within the world of climate science and climate risk reporting. If these kinds of things were happening in a corporation, people would be fired. And instead, in the world of climate change, they're given a promotion. It's quite disgusting. Anyway, thanks very much for watching. For Friends of Science Society, I'm Michelle Sterling.